Good afternoon, this is Sam, and welcome to today's afternoon webinar. You know, give me 1 second and I'm going to share the presentation and we're going to get started after the brief introduction. Good afternoon, everyone. My name is Sam Thakkar, and I'm sorry, I'm at a wedding at Ranch, but I wanted to make sure that I do start the webinar as scheduled. So sorry for the delays and technical difficulty. I hope everyone is able to hear me. If you're able to hear me, please, mention the chat window. At the same time, through this webinar, I would be available to continue any questions you have by, going into Q&A section or chat window. Again, I'm Sam Tucker, Group CEO, Perfect Group of Companies. And today's webinar is an exciting webinar talking about what to do as far as tax planning is considered. And we are quickly approaching end of the year. Are there anything you can do as far as tax planning is considered? Because very important thing is a lot of people ask me this. At the end of the year is an excellent time for tax planning, but this year is a special year where we also have election year and we are expecting a lot of possibly changes. Depends on who wins. So let's technically start the webinar today. Perfect Group has been in business for more than 20 years, and we are now diversified group. Actually, in 2016 and 2020, this year, Perfect Tax was elected as one of the fastest growing 5,000 companies and was awarded an Inc. 5,000 magazine award this year. Whoever is recently joining, I'm Sam Tucker, and if you need to ask me questions through this webinar, feel free to click on Q&A section or chat section and ask me these questions. We'll try to keep this webinar small and precise. And if you have any questions further towards the end, I would also give the contact number and the text number which you can call for and ask questions as well. So we started business in 2002. Mr. Mahesh Thakkar is a founding member of the Perfect Group of Companies. And over the years, we have grown to now more than 400 employees. Group has expanded now into real estate development, media, hospitality, and entertainment industries in last 10 years. This just gives you a little bit of viewpoint of the group's diversified companies. You might already be aware if you're from Dallas, Perfect Tax operates under Funasia brand or Fun brand. At the same time in UAE, we are world's largest South Asian media and entertainment company in UAE. We work and operate under a brand called Big FM. And at the same time, in Raleigh Durham, we operate under brand Radio Mirchi. We are licensed brand of Radio Mirchi as well in Raleigh Durham. We are also very soon launching a Netflix competitor for South Asians, which will be the largest South Asian entertainment platform available through your smartphones, smart devices, and Apple TV, Roku TV, and other things. We obviously are into theaters, food and entertainment, concerts and events. In real estate space, we are into residential development, mixed-use commercial development, land development. In tax and consulting side, we are in the federal, consulting of federal tax planning, real estate incentive planning, high net worth individual corporate and tax planning, and we provide CFO services. This is just a quick view of the entire circular view of the real estate development and the entire group of companies, which includes resorts, radio, movies, banquets, entertainment, tax, business formation, accounting, bookkeeping, tax planning, which includes wealth and estate planning, and real estate, where we are investing with our investor group into real estate. Today we have more than $60 million deployed in variety of projects, earning great potential and great returns. This is the diversified group services which we provide today for individuals, businesses, audit, risk mitigation, depreciation planning, charitable planning, IRS case settlement planning or IRS case settlement, foreign compliance, bookkeeping, payroll, capital gains tax planning, estate planning, depreciation planning. We also provide from radio channels, movie theaters, catering, advertising, event management. Our business model is very simple. We focus on innovative products which focus on customer value creation. Our core products are compliance products, which also again focus on customer value creation. We keep customer value creation in the center of our entire business model. Compliance, with again creating customer value to make sure that our customers are always compliant from tax and RS standpoint of view. And we have complex, planning products, which also again focuses on customer value creation. I'm going to start with foreign compliance as a today's topic. I'm going to spend a few minutes on foreign compliance. A lot of people ask me this question. We were the first firm in US to explain what the foreign compliance was. In 2008, when we highlighted foreign compliance, a lot of CPA firms, a lot of accounting firms didn't understood what foreign compliance really means. And today, majority foreign compliance or majority firms today have learned and are trying to help their clients become foreign compliant. What do I mean by foreign compliance? Is that whenever you have a foreign accounts, you have to report those foreign account balances, which includes the FBAR forms and FATCA forms, and you have to report the income from the income tax reporting. Foreign account means anytime you have a financial accounts in international countries, which includes the different kinds of financial accounts. FBAR law has been existing since 90s, but you have to report them and also you have to report the income. The law is made by US Treasury and handed out to IRS for compliance. And IRS purpose is to identify person who may use foreign accounts to circumvent US tax laws. Both small or large non-compliance are equal victims of these laws. Investigators use FBARs to trace funds that are used for illicit purposes or identifying the unreported income maintained or generated abroad. Unreported income are subject to additional penalty and taxes. Who needs to comply with FBAR? I say that, FBAR, for a compliance standpoint of view, green card holders, citizens, L1 holder, visa holders, H1 holders, F1 students, and US residents who are living abroad are also required to comply with FBAR laws and foreign compliance laws. What are the forms which you are required to file for IRS compliance? Obviously, the income goes on 1040, but then there is 926 for partnerships, 8938 for S corporations and C corporations, 5471 for partnerships and C corporations, TD 90.20.2.1, which is an FBAR form, True 555 form, Passive Foreign Investment Corporation form, 1116 form. So there are tons of forms that are required as part of this thing. What kind of income you have to report? You have to report any foreign salary income, interest income, dividend income, rental income, sale of stock, joint income, agriculture income, mutual fund, partnership income, inheritance income, life insurance policy distribution income, or business income. Which accounts to report? As I mentioned to you earlier, you have to report your local bank accounts in international countries, life insurance policies, foreign business and partnership accounts, NRO accounts, NRE accounts, NRA accounts, NRNR accounts, stock accounts, rental property, mutual fund, provident funds, employee provident funds, retirement accounts, post office fixed deposit accounts, or any joint accounts with your local, parents, or anybody in international countries. So anyone has any questions, feel free to ask. Again, who has recently joined, this is Sam Tucker. We are right now talking about foreign compliance, but we will very soon go into tax planning, and then eventually would end the topic by investments. I'm sorry if you have any technical difficulty. I'm at, ranch in a wedding, and, I'm doing this webinar in between this wedding, rituals. And I hope everyone is able to hear me clearly. If you are having any challenges, feel free to, click on your chat window or Q&A window and mention that to me. So I know that I can repeat that particular slide. If you have any questions, feel free to ask me questions on your Q&A windows or chat windows as well. US person who has to report that foreign bank account is somebody who is a US person who has a signatory authority or has a financial interest or is maintaining any foreign financial accounts. And if your combined balance exceeds $10,000 in last 8 years, you have to report that. If you're a signatory authority on your foreign financial accounts, if you're an executive of a company and your company has accounts in international countries, and you are a signatory authority even on your company accounts, then you are still required to report some of these forms. It also applies to individuals, trusts, or corporations. Somebody who has not filed this FBAR law in last 8 years, there could be civil penalty for willfully failing to file penalties, and that could be as high as $100,000 or 50% of the aggregate balance. Penalty for not reporting income is 75% of taxes. So I always recommend that you should report some of those things and not miss out this opportunity, else there could be significant penalties. So a lot of people ask me these questions, that what are my options if I'm one of those person who forgot to report some of those things. Your options are very simple. You can file a delinquent FBAR, you can file an OVDP, or you can file in streamlined filing procedures. Why choose Perfect Tax for foreign compliance? Perfect Tax and its experts have completed over 1,000 cases with 100% success rate till date. Only one rejected case, which was due to our client hiding and not providing rental property information to us, which IRS came to find out later. We have in-house attorneys to address complex issues. We have attorneys in international countries. We also have offices in international countries, which includes Philippines and India and UAE, where our experts can help you to achieve some of those bank statements. If you cannot retrieve those bank statements, we can help you. We also give you price guarantee within 30 days that if you can find somebody providing the same service at a cheaper cost, we match or exceed that price discount. Now, one other question, it's a quick quiz question. How much US resident in average pays each year in taxes? And that number has to be in percentage. I would let everyone answer that question on the chat section. So how much US resident in average pays each year in taxes? Click on chat window and mention your answers in your chat window, that how much do you think they are paying in taxes every year. I'm waiting. I'm going to give you guys 30 seconds, and people who win would win a special benefit, which would send you as part of being the winner. I think I have an answer. 15%. Well, average US person pays about 22% in in the highest tax rate, and average tax rate is about 18%. How to protect from high taxes if Democrats won 2020 election? We all know Biden has said that he's going to increase some of the taxes, like he has talked about getting rid of like kind of exchange for people who make income more than 400K. He has also talked about increasing capital gains tax to 40%. So long-term capital gains tax rate today is about 20%, 15 to 20%. He has talked about increasing the long-term capital gains tax rate for anybody making an aggregate family income of 400K or more. He has talked about increasing that to 40%. He's also talked about bringing some kind of wealth tax as well. So there are a variety of taxes that we are expecting this year. Today, based on the polls, obviously Biden seems to be high in election polls, and there could be a chance that you might see some of the taxes next year. We classify our tax planning and asset protection into 4 different buckets. Simple tax planning is for people who have payroll, which has home office, or have special event buy sell transaction where they are buying or selling, house, investment property, or stocks equally. If you're selling your stocks more than $50,000 prior to selling, it's a great idea to consider simple tax planning. Charitable planning is for someone making more than 250K income, and he could be W2, it could be a W2, it could be on capital gains, it could be on business income. This charitable planning is applicable for anyone who makes any kind of income more than 250K. It also provides asset and liability protection. It also helps you maximize your charitable goals. We are helping you how to keep more money with you, and at the same time, you can technically, donate more as well. It's a win-win proposition. Advanced planning is for someone who is making more than 600K income with a business income or a W2 income exceeding 600K, or we achieve the purpose by restricting your income. Solar tax planning is for someone who is making any kind of income more than 200K. You are also achieving by supporting clean energy, and you get immediate solar tax credits and also get the depreciation. A lot of people ask me that, what do you mean by asset protection? Asset protection is very important. American in general are more litigious. There are more attorneys than any other nation. We have one attorney for every 300 Americans. It's a nation governed by attorneys. Best way to get rich is by suing. So majority of you will be sued once in your lifetime, particularly if you're healthcare. 50% of healthcare professionals and individual professionals will be sued during their career. So there is a very high chance, 50% chance is that you'll be sued in your lifetime, one time. Why are you targeted? It is a perception of deep pocket. South Asian in general are considered to be consumers who save a lot of money. So there is a perception that you have money. If you get sued, you have assets which you can back it by. You have high liability career, particularly if you work in industries like medicine or any other industries. Then the assumption is that your job has have high liability. You're easy target and exposed. Why are you targeted? Depends on your profession. You could be targeted because of professional liabilities, like you're a realtor, you're a lawyer, you're a tax professional, you're a doctor. Your license could be in jeopardy. You could be targeted because of life-related events like vicarious liabilities, direct liabilities, employees liabilities, real estate liabilities from rental properties, business dealings, and accidents, car accidents. As simple as, you're driving a car and, you might hit in a car accident. Now, a lot of people can argue that car accidents could be protected with insurance. But remember, if you are in a car accident and you don't know if you're hitting someone who has, is going to sue you for how much. If he breaks his leg, he might sue you for, maybe, depends on what income he makes. He might sue you for larger amount, and your insurance might only cover you up to $200,000 to $300,000 maximum. If he's, a high income individual, he might, or if he dies in the car accident, he might sue you for a couple of $1 million, and your insurance might only protect you up to $200,000 to $300,000. Every lawsuit, you cannot protect against the cause. You often cannot control the cause, but you can always control your motivation. So if you defeat the purpose why people sue you, then you can technically create a situation where people cannot sue you. So if you protect your assets, people sue you because they think they can recover money from you. But if you protect your assets where they cannot recover money, then at that point of time, he cannot technically, you're demotivating that. We had a client last year who went for divorce, and he had an asset protected into a risk management structure which was not subject to divorce. A lot of people ask me this question, CPA versus tax strategist. What is the difference? I have a CPA, doesn't that mean that I'm already protected? Ironically, most of us turn for our knowledge to our CPAs. No offense to our CPAs, but the job is to pay your taxes or pay our taxes, not to figure out how we should not pay taxes. Some of us are still using TurboTax, hoping that somehow the program that uses only the information we plug into will magically know all of our extenuating circumstances and help us save us money. So, I always say that, TurboTax or softwares are garbage in, garbage out. It depends on what you input. They are only supposed to calculate your taxes. TurboTax themselves do not claim that they are tax planning experts. Sorry, my cable was disconnected. So this is, however, a group. We are a group of professionals that can help. We are called tax strategies. Tax strategies are not CPAs. Their job is not to pay our taxes or file your taxes, but the combination of tax attorneys, CPAs, financial advisors, IRS enrolled agents. They are a group of combined experts who help you. Tax strategies are expensive. Why? Because they can be. I'm happy to pay $15,000 if you're going to save me $25,000, because tax strategists in general are profit centers. They generate money for you. So that is why they are expensive. One of the coolest part about what we offer, we have multiple tax strategies that work on our company and coordinate efforts between our asset protection attorneys and tax attorneys. And also we help create a tax strategy specifically for you. As we set you up in the structure, you're now positioned to take advantage of tax laws you probably never heard or had access to, which can save you a lot of money on your taxes. Some tax strategies. A lot of people, you might have always heard there is renting your home to business, but there's a special section code not taking your rental income. Because whenever you rent your home to your business, you do have to report the income back onto your personal tax, and you report it as an expense. But under IRC section 280AG, you can rent home to your business, where you also get a benefit of taxes. And I would discuss much more in detail about this section 280 AG. FICA tax reduction using an S corporation, but a lot of people also don't understand that when you have an LLC or a 1099 income, you do pay a FICA tax, which is Social Security, Medicare taxes. Now, if you have an S corporation, you can avoid that. But very important thing is how to optimize such that you don't get audited for S corporation, because people overdo S corporation strategy, which eventually leads to more penalties and interest. Income shifting for college and minors. Shift income to, if you have a child who is above 18, there is an income shifting strategy. But a lot of times people don't realize they hire their kids, but your kids, if they are in college, how did they work in your business? Can you pay income to your kids where they can pay for your college education, but at the end of the day, you get a deduction on that? There are strategies around that. IRS Section 280 AG. Your corporation can pay rent to your business for 14 days per year, and this income to you is tax-free, versus your corporation can take it as an expense. So, and you don't have to justify the income. $2,000 per day. There are definitions of per diem which we can utilize, which could lead to $28,000 tax-free income. By using properly IRS Section 280 AG, we can guarantee you that you get about $5,000 to $7,000 in taxes right there. Tax-free income to you and a deduction for your business taxes saves you thousands of dollars. Income shifting. If your kids are going to college, then obviously most students are in 0% tax. Minors have $12,000 per year. We can design such a way where we can shift income from you to your kids, which they can utilize for college purposes, and becomes tax deduction to you. Supreme Court ruled that anyone can arrange his tax affairs so that his tax shall be lowest as possible. He's not bound to choose a pattern that you have to pay highest taxes. Over and over again, courts have said that there is nothing sinister in arranging your tax affairs to keep your taxes as low as possible. Everyone does it, rich and poor alike, and all do it. Nobody owes any public duty to pay more tax than law demands. Another great strategy we have utilized for our clients, and remember, all of the strategies, I'm giving you a summarized view of the strategies. Each strategy has more than 200 pages of tax codes, which, so whenever you come to us, we would create now a summary booklet. We would give you a summary booklet giving you about 60 different tax tools, which you can utilize as how to save your taxes. Then we'd also help you implement some of those things, or you can implement it yourself. You can technically take that one time, pay the fees, and you're done. Or we can help you design the strategies and we can help you implement some of those things, and then you pay the cost for implementation. Example, if you are in a high tax year and you're not moving your income to states like Texas or Florida, so that is what we can accomplish. The green states are Texas states which don't have state tax. Advanced tax planning. You can technically change your character of your low income, low tax character to high tax character. So you can technically change your income from high tax year to low tax year, or you can recharacterize your income to your family members which are in a lower tax bracket. You can also technically do high tax person to low tax person. I think we discussed about that. How can you give income to your kids such a way that they can use that money for college, but at the same time you can get tax reduction on that money. That is possible. Not by the, there is a very special way to create this strategy. So anybody who has child who is going to go to college for the next year or two, we can help them how to make their entire college education tax deductible. High tax period to low tax period. So if you are getting a bonus or a special income like a tax or a stock options which you or your deferred compensation which you are going to cash out on, you can move your income from high tax year to low tax year. So you can move your income. If 2020 was one of the year which you're going to get income, we can move that income to 2021, 2022, or even 4 years down the road. Charitable planning. This is another group of strategy where you can put aside money, and typically when you donate money, you get charitable deductions for that. But a lot of people don't realize that you can technically donate the money, take the tax deduction this year, but you don't have to decide where to donate the money today. You can accumulate that money, grow that asset, invest that asset, and also keep the charitable deduction with you. And when you die, you can pass on that asset to your charity of your choice, keeping more money with you and keeping more money with the charity as well. So that is a very powerful strategy where charity is win-win and you also are win-win and you're able to save money. Example, you can form a charitable LLC. You can put money into there or asset into that. Example, $100,000 in this example. You can donate to charitable foundation or self-managed charitable charity or DAF, and you can lend money to unrelated party or invest money as well. You can give that money to trust because trust is still considered to be an unrelated party, and the trust can technically have a loan to your charitable LLC, keeping the check tax deduction, but at the same time optimizing your benefits as well. What is the benefit of charitable planning? Charitable planning benefits are very simple. You get contentment of giving, you get liability protection, you can get control over the charity, you can control which charity to support, you can control better cash flows, and you can manage the investments. So this is an example of someone contributing $100,000 a year for 10 years. If they had not done anything, their tax deduction or tax benefit, if they're in 40% tax brackets, including state and federal, they would technically pay $480,000 in taxes. But with the plan and without the plan, same guys by the 10th year, with the charitable plan would have $2.7 million versus without the plan, they would only have $912,000. With the charitable plan, by 25th year, they would have $3.1 million versus without the plan, they would have $2.1 million. By 35th year, you would have $6.6 million versus without the plan, they would have $3.5 million. By 45th year, you see the difference increases. You have $12 million versus without the plan, they would have only $5.9 million. Energy tax credits. How you can utilize energy tax credits? We all believe in clean energy, so why not support clean energy and maximize cash flows at the same time by investing into solar credits? How does it work? You make desirable investment in solar project, you receive the same amount back in federal tax rates. So if you invest $100,000, we design such a way that typical tax rates are $25,000, 25% or 26% this year. But we design your strategy such a way that you get 100% of your investment back by getting the tax rates back to you right away. You also get depreciation on top of it, which allows you to take deduction by claiming depreciation on your tax return. Example, if you owe $100,000 tax and if you purchase $50,000 tax credits, you get benefit of tax and depreciation expenses of $33,000, you still owe 16,532. But by adding benefit of depreciation, you ultimately get a net benefit of 20,969. So you get benefit, you get a refund instead of tax owed of $16,000 in this example. Lock your benefits before it's too late. Lock your tax benefit before it's too late. 2020 December is, last date to lock all these benefits. It takes about 30 days to implement some of this planning. So, October and November are the best time to implement some of these planning strategies without losing that advantage. I think there's a question. I'm going to take some question. Are you able to see the screen right now? One second, I'm just checking the question. Okay. So lock your benefit before it's too late. Anyone has any questions about this, please type it into your chat window. And I would love to take some questions in the chat window. All right. So people who don't know, this year, by end of this year, there's a good chance that even estate exemption limits will be locked. So if you are thinking estate exemption limits have been cycling, this year the estate exemption limits were highest, but they keep changing. We are expecting the estate exemption limit, historically it has gone down all the way to $1 million. So my recommendation is that if you want to lock in your estate exemption benefits, it's not late. Talk to us before end of this year. Same way we can cut your taxes in half by implementing some of the strategies. I always say that tax is your number one expenses. If you can cut your taxes in half, you can save immense wealth for yourself. Investment philosophy. Now we are going to get into discussing about investment philosophy of Perfect Group. What do we invest in? We invest in money generating assets, producing income stream for our investors. We invest in opportunistic assets. We invest in safe opportunities in growth and strategic market, and we invest tax efficiently. What to do in this market? How to be successful investing? I always say it's a very simple philosophy. Buy when everyone sells and sell when everyone buys. Be cautiously opportunistic. Asset-backed portfolio. Don't gamble, invest. Where to invest in this volatile economy? Stocks are great if you're a day trader. Lots of investors lose money day trading, but again, if you have understood day trading and if you're successful doing it, this is another great market to invest in a stock. I always say that from long-term strategy, you should rebalance your portfolio with also following classes of asset class: real estate partnerships, tax-efficient investment, income-producing asset, safe asset class, pooled investment to achieve scale. Right now, we closed on an asset fund last week for a $5 million asset fund. We were oversubscribed to $6 million. So we are right now working on a PGH income fund. This fund allows you to claim great deduction as depreciation. So you get depreciation. So whatever you invest, let's say you invest $100,000, you get $30,000 to $50,000 back from depreciation. Your tax benefit is just approximate based on your individual tax rates. You can also save money on your state and federal taxes. Where do we invest your money? We invest your money into AAA rated asset income producing asset funds backed by US government or AAA credit rated tenants like AT&T, Microsoft, and other Fortune 500 companies. We also invest into asset-backed mezzanine debt where you are guaranteed rate of returns. We also invest into income producing asset with collateral. How large is this PGH income fund? PGH income fund today is a $50 million fund. Our launch date is October 1st, 2020, which is about 7 or 8 days or 10 days back. We already have an equity committed for $2 million. We have institutional commitments of $30 million, which are under negotiation. We are leveraging this fund approximately 70-30. So 30% would be that $50 million, and then we'll be leveraging rest from the debt. Exit strategy is 5 to 10 years, and early exit is possible if you want to exit after 5 years. Allowable fund source. You can invest money from 401k, self-directed IRA, donor advised fund, checking your savings accounts, or brokerage accounts. How do you, what is the holding period? Holding period is 5 years minimum. Exit options after 3 years. We are contemplating technically taking this fund to a tradable fund with a Reg A plus ruling. So if we go to a Reg A plus ruling, you can trade your asset into the market after 3 years. Depreciation benefit is allocated based on investment. You're getting dollar to dollar depreciation benefit. Your Class A investment gets, if you are investing below 250K, your Class A investment gets you minimum 8% return guaranteed paid every quarter. Your Class B investment is 250K to 500K. If you're investing that, you get 10% preference returns. Let me see if there are any questions posted. That's what collateral you have for our investment. So all the assets are backed. An example I would give you right now, we are contemplating an asset or reviewing and evaluating an asset which is in Austin, which is a VA hospital. It is backed by US government lease for next 13 years. And VA normally renews their lease. They don't like to move. So they are better secured assets than even your bank CDs, because your bank CDs are protected only up to $250,000. This particular asset class is protected by bank CDs. Now we have mixed asset class in this thing. So, out of $50 million fund, $10 million might be getting invested into asset class like this. Then we are right now evaluating an asset owned by AT&T, which is leased by AT&T, and we are going to evaluate and figure out that which is the best asset class, to buy, because it has an asset-backed thing. AT&T is diluting, divesting some of that asset class to raise some cash in this market space. We are also evaluating other assets like similar assets like this. Then we have Class C assets. Or if you're a Class C investor, your investment returns are 12%, but with the depreciation, you're making 18.46%. Same way, Class P1, where you're guaranteed 5%, but on upside, you're not limited. You can get up to 20% returns. Excuse me, my power adapter disconnected. Class P1 is where you are, getting, again, all of these asset class, you get depreciation. So you get about $30,000 to $50,000 back from Uncle Sam right there. That is an extra bonus. Class P2 is where you get up to 35%. Your minimum investment required is $1 million, but you get up to 35% return. With depreciation, it could even go higher. Leadership team, I'm Sam Tucker. I serve as a Perfect Group CEO. Been with the business more than 12 years now. Purvesh, Vaishali. Purvesh has a real estate side. Vaishali heads our entertainment, media, and tax side. Dheeraj is an ex-Z CEO. He used to be with ZTV and he was Z CEO. Mohammad Qasim used to be working with CBRE. Sam Siani used to work with American Airlines, and David Pagan, who is a corporate counsel, used to work with Texas governor and Arnold Schwarzenegger for California government as well. I would like to take some questions. Investments are collateralized, obviously, with the asset behind it, and we are buying income producing asset. So you're guaranteed the fixed returns every year, every quarter. The returns are paid quarterly. Again, I appreciate everyone joining on the Saturday afternoon. If you have any questions, feel free to. So where do you go from here? You maximize your cash flow through charitable tax planning. You secure your solar tax credit before 2020 and 2020 ends. You restructure income through advanced tax planning, and you invest efficiently. That is how we can help you maximize your value. You can send an email to info@perfecttax.com if you have any questions. If you want to text, you can call or text us on 214-454-7230, or you can also call on 469-213-1519 if you want to talk to someone in real time right now. Or you can call Lee at 214-576-6439. Thank you again for everyone joining this afternoon. We'll continue talking next week on a different topic. We'll send an email out. Please keep tracking our emails and text messages. Thank you again for joining this afternoon's webinar. We had more than 30 people who had joined this afternoon webinar. We appreciate that. If you need any other questions, feel free to call or text us or email us on this thing, and we'd love to answer your question. Again, my number is 214-454-7230. You can text me or WhatsApp me on this number. Thank you again for joining our seminar and webinar this afternoon. And I look forward to see you again on next Saturday at 3 o'clock same time. Thank you very much.